Bitcoin is now down for the year, and it's roughly 30% off its recent highs. Analysts say Bitcoin is sitting at a critical level after a sharp correction from the all-time high. From the peak to the November low, the drawdown hit about 36%. Today, it's still near 30%. A big year-end dip is not what many investors expected, especially compared with traditional markets. Traditional assets up, gold is up, silver is up, major stock indexes are up. But Bitcoin is down. In 2025, BTC underperformed. In 2025, nearly everything has outperformed Bitcoin, an outcome few predicted. But zooming out, the long-term trend remains upward over time. Still, one key trend dating back to 2022 appears to have been broken. With that break, there's a chance we see more downside heading into the first quarter of 2026. Not necessarily below 36%. It doesn't have to go below the previous 36% correction, but short-term weakness remains possible. In other words, this may not be the exact bottom, but investors should be aware of near-term volatility. Some commentators are calling this a dip buying opportunity for long-term investors. They point to indicators flashing a buy the dip signal, similar to prior cycles. Well, they argue we've seen similar setups in the past, followed by eventual recoveries. Well, echoes of 2017-2018. Some compare it to the old $20,000 wall from the 2017-2018 run-up. Resistance can break. Back then, many believed that level would be massive resistance prone until price pushed right through. The argument now is that 125,000 is today's psychological barrier, just like 20,000 was. Patience. The message to long-term holders: be patient. Supporters frame Bitcoin as digital gold and argue adoption still has room to grow. They claim the majority of the world still owns no Bitcoin, which could imply more upside if adoption expands. They also point to Bitcoin's capped supply and the fact that most coins that will ever exist have already been mined. With the global population growing and culture going increasingly digital, supporters struggle to see Bitcoin staying under six figures forever. They also highlight Ethereum, suggesting it's building a strong base for a potential breakout later. Not today or next week. The expectation, however, is not immediate, and this could take weeks or months. Crypto here to stay. The long-term thesis: Bitcoin and major crypto networks are here to stay, and potentially higher in the future. On financial television, Anthony Pompliano reminded viewers to focus on multi-year performance. He said Bitcoin is up roughly 100% over 2 years and nearly 300% over 3. He also cited a decade-long compound annual growth rate around 70%, emphasizing long-term momentum. But he stressed the obvious: Bitcoin comes with volatility. Volatility trending lower toe. 1 point raised. Volatility may be compressing over time, which changes how the cycle feels. That could explain why there wasn't a dramatic blow-off top, and also why we haven't seen an 80% drawdown. Of course, nobody knows what happened next. Price could dip further, or grind higher. And that's roughly what we saw from about 125,000 down to around 80,000. Support may be stronger. In that view, stronger support could emerge, limiting the worst-case drawdowns. Support may be stronger. In that view, stronger support could emerge, limiting the worst-case drawdowns. Now, a surprising comparison. A U.S. lottery jackpot reportedly reached $1.7 billion. Commentators argue jackpots keep getting bigger because base currency buys less over time. They even converted the jackpot into Bitcoin, claiming it could buy about 19,540 Bitcoin. Money supply grows. The broader argument, dollars increase in supply, while Bitcoin supply is capped. Bigger jackpots ahead. So they speculate future jackpots could climb into the tens of billions over time. A viral post is claiming the author will share winnings with followers who engage. But is this giveaway legitimate or just another social media trap? As always, viewers should be cautious with viral promises and verify claims independently. Long-term thesis persists. Meanwhile, even after missed year-end predictions, some strategists say lower prices are a chance to accumulate. The transcript also mentions companies expanding crypto treasury strategies, particularly around Ethereum. Institutions expanding crypto, and it points to Wall Street's continued push into crypto products for institutional clients. The claim is that more crypto offerings could roll out in 2026 as institutions broaden access. Skepticism remains. Yet despite awareness, skepticism remains about whether these assets have a long-term future. Institutional buyers turned more bullish, buying more than new supply for the first time in weeks. Next, the video transitions into a sponsored segment highlighting a yield platforms. It describes a US-based platform available on browser and mobile, and claims recent payouts set new records. The sponsor pitch says it uses MEV bots and a staking system to lock terms through the deposit period. The stated goal is to help users navigate volatility and network conditions, though these are promotional claims. The sponsor segment references visibility at a major crypto conference, with attendees learning about the platform. It also cites various media write-ups, suggesting broad coverage across crypto outlets. A clear reminder follows: not your keys, not your crypto. Do your own research and make your own decisions. Viewers are directed to FAQs and official channels for additional information. Welcome back to the market. As we return, the major indices are reacting positively to the news from overseas. Next, a past on-stage moment is referenced, where Michael Saylor was reportedly laughed at during a previous dip. Bitcoin then fell from around 108,000 to 80,000, and now it's back near that zone. Bitcoin then fell from around 108,000 to 80,000, and now it's back near that zone. The transcript frames this as a potentially historic entry point, based on perceptions of reduced risk. The argument is that institutional acceptance is growing across banks, Wall Street, and policy circles. But the market remains skittish due to macro concerns, tariffs, economic conditions, and shifting rate expectations. As rate projections move by tens of basis points, risk assets often react sharply. The claim is simple: if macro conditions flip back to risk on, Bitcoin could rebound aggressively. Supporters believe it could rip forward once the broader market sentiment shifts. The claim is simple: if macro conditions flip back to risk on, Bitcoin could rebound aggressively. This report is for information only, not financial advice. Stay informed, manage risk, and focus on your time horizon. One final quote argues that much of the perceived risk has been priced out as adoption becomes more likely. The idea is that once major institutions embrace Bitcoin, others may follow. Yet the market remains cautious due to tariffs, economic uncertainty, and the interest rate path. As expectations shift by 30 to 50 basis points, risk assets can stay under pressure. And if that macro tone flips, proponents expect Bitcoin to surge forward. That is our market update. we all continue tracking the charts and macro signals into 2026. D, don't forget to like, share, comment, and subscribe. Well,